Short-term insurer Santam released their half-year results today. For the 6 months ended June 2024, the company reported group insurance revenue at 24.6 billion rand. That's up 10% on the year before, with headline earnings per share rising by 35%. Despite what the insurer has described as a difficult operating environment, they were able to deliver positive metrics to the market. Well, to take us behind the numbers and give us a sense of what's been happening, I'm joined by Tavaziva Madzinga. He's the CEO at Santam. Thank you very much, Mr. Madzinga. So in the period under review, what was your increased revenue number driven by?
Good afternoon, Nompu, and thank you very much for having us on the show. As you mentioned, the first half of the year has been a very difficult operating environment, but we have seen an improvement in our revenues, largely driven by premium increases, and we've also seen an improvement in our underwriting result and profitability of the business compared to the same period last year. And a huge amount of that improvement has largely come through as a result of better underwriting actions within our underlying business.
So you've reported that gross claims paid out were 14.2 billion rand. How did this compare to the previous year? And were there any interesting claim trends that you observed? And to what extent have weather-related claims risen?
Yes, we continue to see an increase in claims, and the predominant theme that is coming through on our results really has to do with weather-related claims. And so that's a local trend that we're seeing, but it's also an international trend that we're seeing across all global P&C markets. And so closer to home here is that we've seen claims in the region of 600 million that we've paid relating to weather. So floods, windstorm, and lots of heavy rain falling in very short periods of time that is causing damage to property. But I must say that this is our business, and we are quite pleased the fact that we've been able to help our customers and clients weather the effects of these weather-related claims.
I know you've been employing the Future Fit 2030 strategy. How has this been helping in terms of creating efficiencies in your business?
So we've taken a two-pronged approach, to driving our business forward to the year 2030. I think in the short term, really looking at tactical actions to improve the profitability of the business, but also working with our brokers and our clients and the entire value chain towards a more positive risk narrative around risk mitigation. And I think that's yielding a lot of results for us. In the longer term, we are a South African business, and so our priority is really to remain dominant and strong, within our South African business. We are looking at also growing our international presence. Our international business currently contributes shy of 18%. And then further afield, we start to think about how do we take insurance to a much broader spectrum of South Africans that have not traditionally had access to insurance before. And so we believe that the combination of these short-term tactical actions and the longer-term strategy around our Future Fit focus for 2030 should drive the business profitably into the future.
Yeah, I can't remember if India is the most populous nation in the world or China, but you are there, present in India. How's your business doing there?
I think there's nothing not to like about the Indian macroeconomic environment. I think you are finding that there is good growth, as you said, populous nation, but we have a strong partnerships in India with SGI, and what we are finding is that with the working together with the team over there is that the business is performing well. There is cross-pollination of ideas and synergies between us and our Indian counterparts who we work with very, very well, and so lots of learnings for both companies, and we're seeing positive traction and some of the results coming through from our India international business.
Yeah, just coming back to the domestic market and looking at the consumer specifically, we know everyone's been having a hard time in this challenging economic environment. What have your observations been in terms of lapses when it comes to the payment of premiums?
I think it is fair to say, Nompu, that the macroeconomic environment is difficult, both for your retail and for your commercial and corporate, customers. But what we are finding is that in these difficult circumstances, people certainly do appreciate having insurance. And like I said, we've seen the impacts of the weather-related claims. We've seen as you mentioned earlier, that, yes, CPI is coming down, but we are finding that, motor-related inflation, particularly the cost of parts, paint, labor within the motor-related value chain, does remain very difficult, and that does remain above CPI. So you are finding that premiums, typically, are tracking ahead of CPI inflation. But I think on our part, we are looking at segmented premium increases, increasing excesses and deductibles, and effectively trying to manage down that cost of insurance to our customers, and working with our brokers, particularly around risk mitigation. And so you'll find that asking customers in some cases to improve the tracking devices that they put on their cars to reduce, for example, the risk of theft to their vehicles.
Yeah. And Mr. Madzinga, one last question just around your foresight or your outlook for the balance of the year. What is your outlook?
So looking into the rest of the year, we know we can expect increased rain. I think the climatologists tell us that with the La Nina effect, we can expect a lot more rain in the balance of the year. We certainly expect hail, and so we do remain cautious in terms of expectations for the balance of the year. But I think the actions that we're putting in place to ensure sustainable premiums for customers and clients across the board, both in the retail and the commercial sector, working with all our partners in the value chain, does ensure that we should expect positive momentum into the second half of the year.
Thank you so much for speaking to us. That was Tavaziva Madzinga. He's the CEO of Santam.